Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today, as always, Michael Becker.
Hey, Paul.
And also James Eng. Hey, James.
Hey, Paul.
Thanks for being the podcast, guys. We want to do an introduction to one of our friends in the multifamily brokerage business that we've done a lot of business with in the past. We think that he's well respected in the multifamily business here in the Dallas-Fort Worth area. He's been in the multifamily business for a long period of time. He is with one of the largest companies in the brokerage side, so he brings a lot of sellers and marries a lot of buyers together. He's kind of the middleman. He's a guy you want to know, you got to meet. And so in the podcast today, we have Al Silva. Al, how are you?
Doing great, Paul. Thanks a lot for having me, guys.
No problem. Thanks for being the podcast. So I'm going to kind of kick it over to James and to Michael, and let's kind of visit with Al.
Sure. Thanks, Paul. Al, maybe just kick it off with just a little bit about how you got started in the business and what your background is before getting into multifamily.
Yeah, sure. No, I appreciate it, James. So I started with Marcus and Milledge in March of 2004, so a little over 13 years ago. I graduated college the previous December from Texas A&M as a finance major. 2 months later, I was I sat down with a phone and a computer at Marcus and Milledge in the Dallas office and started off as a multifamily broker. That's all I've ever done in my professional life, and have loved every minute of it. Have been with Marcus the entire time. It's been a great run, ups and downs, but very, very rewarding career so far.
So how did you choose sort of Marcus and Milledge, and what do you think separates them from some of the other brokerage shops out there? And then also maybe talk about how your group is different than maybe some of the other groups within Marcus and Milledge.
Yeah, sure. So I interviewed with several different shops coming out of college. First it was between banking and real estate investment sales. And what I liked about Marcus and Milledge was the fact that I didn't have to spend 5 years as an analyst to get out there and roll up my sleeves and get into the business. I really liked the entrepreneurial spirit that the company had. It's got the big name, the 90 offices across the country, the 1,500 agents across the country. So it's got the national presence that you want and the brand recognition that you want, but you also get to run your own business under that shingle. It's not this, top-down command and control thing. It's more of a grassroots, the best brokers make it. And that's what really attracted me to Marcus and Milledge. Also the fact that, all these offices we have across the country, they all cooperate with each other. When I put a property on the market, every one of our agents across the country and in Canada can see the listing hit the market, put it in front of their clients, and they can, in turn, bring offers and come see the property. A lot of other companies don't offer that. Each office kind of sits in its own little cell and operates on its own. So I like the interconnectedness, and as a result, I've been able to build relationships with literally hundreds of other Marcus and Milledge agents across the country, and we send deals to each other. We exchange ideas and thoughts and kind of best practices, and it's really fun. We have a lot of fun in the process. So
talk about your specific team, sort of members of your team, and what their role is versus your role, and then how does that distinguish your group versus maybe some of the other groups here in Dallas?
Right. Well, our team consists of myself and then Ford Brawley, who's been with me 4 years now. And, Ford's doing outstanding work. Mark McCoy has been with us for a year and a half now. He's also doing outstanding work. So the three of us brokers, and then we've got Brenna Skinner, who's our marketing coordinator, but she's a lot more than that. She's kind of the glue that holds the team together. But yeah, we focus specifically on multifamily workforce housing, B and C class multifamily in Dallas-Fort Worth. We have a laser focus on that. We don't try to necessarily go out and sell A properties. We don't try to go outside the Metroplex. We really try to have a laser focus on this market because it's such a huge place, 6 million people, 4,000 or 5,000 apartment buildings. And that's a lot to keep up with, a lot of players. And so we're just laser focused on that. So a lot of other teams within Marcus and Milledge and outside are very, very capable teams. And we respect all of our colleagues and even our competitors. But, a lot of them, go into different product types or they go into different markets. And kind of what differentiates us is kind of our laser focus on DFW workforce housing.
Got it. In terms of, we're sort of mid-year here, 2017, talk about sort of how the transactions are going for this year and what you're seeing in the market when you're talking to sellers and then also talking with buyers.
Yeah, sure. So, the transaction market here in DFW still is really, really hot. I think volume is going to be down this year, some from last year and the prior year overall, not for our team. Our team last year did 20 deals across DFW totaling a little over 4,000 units for $230 million. Wow. So far this year, we're in June, we've listed, put under contract, or closed already 20 deals totaling about 3,900 units and $240 million in volume. So we're seeing an uptick in that, and a lot of that has been driven by there's not a lot of inventory on the market, and the little inventory that's out there is attracting a lot of attention, especially when it's being marketed the right way.
So let's maybe start on the seller side. Is it difficult to manage their expectations when they take it out to market? How do you sort of talk about that process with sellers in terms of getting the listing and then also managing the expectations of the seller?
Well, it's funny, a lot of buyers get frustrated because it's so competitive in the market and they have to bid for these deals and they lose so many before they win one. Well, on the brokerage side, it's similar in a lot of ways. There are fewer players, but every deal is competitive. Every deal you're competing with 3 or 4, sometimes 5 other shops, and you've got to put your best foot forward. Sellers respect when you are aggressive on pricing, but they also, their BS meters also can go off if and most sellers are astute enough to understand when somebody's trying to buy a listing from them. And so we try not to do that. We try to set realistic expectations coming out. And if we exceed those, well, that's wonderful. The market will prove that up. But yeah, it's a challenge getting the listing. But through that competitive process, a lot of times sellers' expectations the sellers get educated on what they should realistically be expecting.
So volume overall, you say is going to be down this year or is down kind of year to date versus last year. Do you have a sense of kind of percentage of it being down overall?
I think overall transaction volume will be down about 10%. Year over year.
And why do you think that is?
Well, part of that has to do with the fact that the A market has slowed down some. And those are your larger dollar volume deals. And the large portfolio transactions have slowed down a little bit. It's by no means is it slow. You're talking about taking a half step back from a breakneck pace. And so moderating in the A-class market is probably most of it.
Most of it, but you haven't seen much in the B and C space in general, or is it just your shop that's a little busier than the others?
Well, I think we've certainly picked up market share this year, and we're excited about that. But overall, I think the other part of it can be explained by the fact that after the election, there was some uncertainty, with the 10-year going up as quickly as it did, and with kind of political uncertainty and tax uncertainty. A lot of people kind of tapped on the brakes after the election for 2 or 3 months. And I think what happened, it was kind of funny, about mid-February, we were marketing several properties, and we were kind of surprised in January by how light the activity was because there was not a lot of inventory in the market. But kind of a light switch went off in mid-February. I think everybody kind of realized that the market was still going to be great this year. And since then, we haven't looked back. We've hardly had time to put our heads above water.
On the deals you have fully marketed, are you seeing more offers than you did last year, like as far as each deal?
Yes, absolutely. I was looking at kind of the year-to-date deals that we've been working on. We've averaged 3.5-week marketing period, 25 tours, 15 offers. That's our average deal.
And that's up a few each.
Yeah, that's up. Last year maybe you're talking 18 to 20 tours and maybe 10, 12 offers.
Wow.
So that comes down to more buyers chasing fewer deals available.
Has the buyer pool changed at all?
It's interesting. I was telling a client this earlier today. This is the most diverse buyer pool I've seen in 13 years. And what I love about it is that the local and Texas-based groups are still big players. In the last cycle, I think that's a big difference, is the local guys are still active, and that gives me a lot of confidence in where we are in the market. But, Yeah, the international buyers coming into the scene has kind of been a little bit of a game changer. It's something I haven't seen in our space before, but we've done deals with Mexican groups, Chinese groups, and Japanese groups in the last 6 months.
So that's real. Yeah, I've been hearing that too. Japanese money coming to Dallas.
Oh, yeah.
And buying deals.
When you can borrow at 0%, these cap rates are pretty attractive. And so I think the international, Dallas-Fort Worth going onto the international radar screen has been, I think that's something that's changed, and I don't know that that's going anywhere anytime soon. It's an international market now.
So the international guys, maybe they have one or two properties here or zero. How are they getting the attention of sellers besides price?
Well, price and hard money and offering up the terms. But yeah, I mean, that's the thing. A lot of times these international investors, the way they really win is by having a lower cost of capital than the domestics do. And therefore, they can pay a higher price in many, many cases.
We're here in Fort Worth at your office in downtown Fort Worth, and you guys specialize, I would think, a little bit more on the Fort Worth side of the Metroplex. Maybe talk about some of the submarkets that you like and some of the things that are happening in this side of the DFW side.
Right. Well, I was born and raised in Fort Worth. I'm a Fort Worth guy. So, I'm happy to be here in downtown Fort Worth. I did spend my first 5 years with Marcus and Milledge in the Dallas office and, moved back over here to Fort Worth after this office opened. And to this day, a little more than half of our business is in Tarrant County, which includes Fort Worth, and the other half is in Dallas. We're still very active in Dallas, but we love Fort Worth. We're very active here, and we're really the only major brokerage team in DFW that's based here in Fort Worth. So I think that gives us kind of a unique perspective on this side of the Metroplex. And I think when you live somewhere and eat and breathe somewhere, it gives you kind of a brighter picture to paint.
How do you see the two sides of the Metroplex being different from your perspective? So, I mean, we had Greg Willett on 4 or 5 months ago, I guess, Paul, when he came and said there's about 50,000 apartment units in DFW under construction, and of that, about 42,000 of them were on the Dallas side, and about 8,000 were on the Fort Worth side. So that obviously seems like the attention has kind of historically been more on the Dallas side, and it's the bigger side is 60% larger than the Fort Worth side or something like that. What's your opinion of the two markets or the two sides of the market, and how do they differ in the way they function and operate?
Well, it's funny, one of the main reasons that I came to Fort Worth is I thought we had a lot of the same metrics as far as growth and job growth, population growth, diversification of the economy. We have a lot of the things that attract people to Dallas, but we were just lesser known, basically. And so Dallas has historically been known as the big city, and Fort Worth has historically been known as kind of a suburb of Dallas. I think over the last 10 years, I've seen this evolution of, Fort Worth being recognized in its own right. I mean, we've got 900,000 people in Fort Worth now, and Tarrant County has gotten so huge. So Fort Worth has been seen as kind of the smaller market. Cost of living has been a little bit lower historically. Rents have been a little bit lower historically, but we've been building less here, and the population growth on a percentage basis has actually been higher than Dallas in the last 4 or 5 years. And so we're kind of playing catch up at this point. Rents are starting to catch up with Dallas. They're not there, but the gap has closed considerably.
Are you seeing the pace of the growth of rents being faster on the Tarrant County side than the Dallas County side?
I have observed that, yes. Yeah. Now, if you go to Dallas, if you go up to specific submarkets in Dallas, like North Dallas, Richardson, Plano, where all those companies have been relocating, that's a little bit different.
Yeah, but kind of like in the workforce housing space.
In the workforce housing, yes, the rent growth in Fort Worth has been faster than in Dallas. I would argue the last 3 or 4 years straight.
Okay, and then so what are some of the headwinds? I mean, so we own a bunch of stuff. So the biggest headwind recently has been taxes and kind of the growth and the aggressiveness of the county appraisal districts, et cetera. Besides that, have you had any recent headwinds that you've observed in the marketplace besides just kind of pricing getting up and making these margins and yields get a little bit skinnier for everybody?
Well, I mean, it's funny, we did a conference, we do an annual multifamily conference, Marcus and Milledge does here in Dallas, and we do surveys of hundreds of local owners, and what scares you the most, or what's your biggest concern for 2017? And the answer to that survey was overwhelmingly property taxes. So Tarrant County especially, they've been notoriously aggressive here going after property owners. They read the headlines of apartment rents growing so fast and transactions and how much higher the pricing has gotten. And so they've caught wind of that, and they've, I think, overstretched quite a bit, and it's become a challenge for owners. But besides that, I haven't seen any real headwinds. Overbuilding, especially in Tarrant County, is not an issue. Up in far north Fort Worth near Alliance and some of those areas, there are a lot of units that are going to be delivered. But outside of that specific pocket, Fort Worth has actually built very little, but the population has grown a ton, and it just comes down to supply demand. So I don't see any headwinds for us at this point, knock on wood.
Yeah.
You've done, 20 deals this year. Maybe talk about maybe some of the terms that these buyers are winning these deals at, and, any advice for maybe somebody coming in on their first or second deal. How are they able to secure one of these transactions?
Right. In today's market, so far this year, out of the deals that you just referenced, the 20, we've averaged 104.6% of our, kind of whisper price or guidance price to close price. So the prices we're closing at are well above the prices that we expect to get going out of the gate. And I think that's a function of very little being on the market and a lot of buyers being out there. So how do you differentiate yourself from, other buyers out there? It's tough. Price and terms and track record, those are the obvious tangible things. But what I think is really, really helpful is, how do you figure out how to, kind of jump off the page with your belief in the deal that you're buying? What are the intangible things, such as, talking with conviction when you're in your buyer interview, speaking to things like your vision for the property, what's your CapEx budget, what are your rent projections, how are you going to make this deal better, and really speaking to that with conviction to the seller and to the broker. It's a great way to differentiate yourself from 15 other buyers that are on the offer matrix, because on the offer matrix, if it says you haven't bought a deal, well, that's tough. But if you get on the call and you speak with conviction and you demonstrate, you have to demonstrate the tangibles, right? You have to demonstrate ability to close. You have to demonstrate price and terms that are competitive. But what differentiates you are those intangibles. And I think that's what a lot of people are kind of missing when they come into the market. But you have to have patience, you have to have resilience, and you have to be prepared.
Well, what are some of the things that annoy you or frustrate you with first-timers or second-timers that are coming and trying to get on your dance card, I guess, per se? What are some of the common things that people do that make brokers upset?
Well, I mean, it's funny. There are certain things that are kind of obvious. If you want to go out there and buy a multi-million-dollar piece of real estate in a hyper-competitive market, I mean, you got to do some very simple things, in addition to all the things I just mentioned. But come see the real estate. Come walk the units with me. Come see it in person. That tells me maybe that you're genuinely, interested in buying the property. And read the marketing package. A lot of times we'll get 100,000 questions, which is fine. We love answering questions and we love walking through the deal. It's our favorite part of the job. But simple things that we put in the OM, it really reflects well on the buyer if they come ask intelligent and informed questions because they've already done their homework when they come see the deal. It impresses the broker, and that in turn gets communicated to the seller. And that's another way that you can, those are things that are annoying that you can easily fix though.
What about bringing team members along with them? So it's like a mortgage broker or a management company or a construction guy. Are those positive things when you're looking to sell a deal to somebody?
Yeah, I think it's a positive thing. It helps me, especially if I don't know the buyer that well. Sure. It's great to be able to talk with their mortgage people or their management company and kind of get an understanding for their team that they're going to assemble to put this deal together. I think it's great. Now, we don't want to show up to the property with 10 people.
Sure.
But, a small group of people that are all really highly relevant to a transaction, we love that. It's great.
It's good. Is there any other things that you observed that, particularly like a lot of these people listen to our podcast are first timers in the business, so just really trying to give practical advice. So what Paul and I always talk about, James, we always talk about, it's a team sport, having your team. If you don't have a resume, you borrow the resume of other people to get you over the hump. So if someone comes out and they have a well-known management company and a principal from the well-known management company, as a broker, do you kind of transfer a little bit of credibility over to so-and-so that you've known and managed, 20 deals that you sold over the past 3-4 years? Is that a good way when they give them kind of the thumbs up? You can then transfer that credibility to the buyer, to the seller of the deal, that this is a legitimate buyer group?
Absolutely. I mean, if somebody like Paul says, hey, I've vetted this guy, they're legitimate, they have the capability to close, here's what their objectives are. It lends instant credibility to a buyer if they've assembled a team of competent people who are active in the market. For example, there's a deal in Hearst called the Bristols, that we recently put under contract that we're closing next month, where we had 27 tours and 14 offers on that deal. And we're selling it to a first-time buyer. And we had a number of groups in that deal who were super experienced bidding on it. But what helped them win was not only a ton of hard money up front, but they brought in somebody who was very experienced in multifamily, who was going to sign on the loan, who was going to guide them through the process, and they had their lender lined up, their management company lined up, and these were all people that lent credibility to that buyer who may not have otherwise had enough kind of firepower to get across the finish line.
There you go, Mr. or Mrs. Listener, that we always talk about it, but you hear an actual real-life broker that sells a lot of deals tell you the same thing. So, Paul?
Yeah, that's exactly correct. And I think it was James is doing the financing on that Bristol's property. So thank you, James. Thank you, Al. So, Al, you've closed, let's say, 20 transactions or listed 20 transactions this year?
Yeah, listed, closed, or put under contract. Yep.
So tell us what the secret sauce is. Why are people selling properties today, and how are you getting so many of these things?
Well, it's funny. We're not doing a whole lot of things differently in our approach. We just think that after 13 years of doing hard, honest work and treating people right, that's the secret sauce to any business. But, we try to get as many at-bats as we can. And I think we've gotten a reputation for doing what we say we're going to do, and also being upfront about what to expect, and not, kind of trying to minimize those surprises. And so when you have a track record, it kind of snowballs, and we're kind of seeing a little bit of a snowball effect. It's a lot of fun. And so I just think in the long run, doing things the right way and being honest and competent is the way to go.
So tell me a little bit, without naming names or properties, give me top 5 reasons why people are selling these days.
Sure. Well, reason number one is obviously, to take some chips off the table. There's been a lot of appreciation. There's been a lot of things going on. So, people want to take cash off the table. In an up market, you'll see a lot of owners. You look at guys like Mike, who started off kind of in the workforce housing, the C-class properties. And Mike, you're closing on newer construction deals now. If it's not, over 20 million, you don't want to look at it now. So it's crazy. So,
it happens too.
Yeah.
Right?
I mean, so that's another motivation, is people want to rotate into larger assets or higher quality assets or less risky assets. That's another really good reason to sell. Loan maturities, people have loan maturities. A lot of times they'll refinance, but sometimes they're ready. Also, we see, some partnership issues from time to time. Those are probably your top reasons right now to sell.
When somebody thinks about Marcus and Milledge, they know a little bit about the background that Marcus and Milledge has one of the largest platforms in the United States. But one of the things I don't think they know is when a seller is selling a property, they may ask for 1 or 2 Marcus and Milledge people to give them a broker opinion of value. Marcus and Milledge is made up of a bunch of individuals, just not one company. So when you get a Marcus and Milledge broker opinion of value, you probably should look at maybe 1 or 2 other Marcus and Milledge broker opinions of value too. Is that right, or am I wrong?
Well, I mean, it's not on every deal, but it does happen from time to time. It's a relatively small world here in DFW, even though there's a ton of properties and a ton of units. It's a relatively small universe of owners, and we've got some really good, talented brokers within Marcus and Milledge. And so, there are times where you'll have 2 or more Marcus and Milledge teams looking at one asset, and we all like each other, we all respect each other, but it comes down to the seller's personal preference, really, on who they think the best fit for the job is.
So tell me a little bit about some of your social media or getting the message out. What kind of marketing, you get an assignment, what type of marketing do you do to get that message out that that property's up for sale?
Yeah, well, I mean, we've got our own website, which is www.silvamultifamily.com. We put all of our listings on that website. That website gets thousands of visits every month. And, that's a great way to get publicity. We go onto the Marcus and Milledge app intranet system. It's called MNet. We put the listing there, and, 1,500 or 1,700 agents across the country can see it and put it in front of their clients. We often use Real Capital Markets it's a marketing platform that has thousands of vetted commercial real estate investors, and they tailor make the distribution list to the type of property you're selling. So that's great. And we've got our own database of just thousands and thousands and thousands of investors across the country.
And you put out a monthly newsletter that I get that actually is pretty good. So you put together articles from the past month about what's going on in the market, and almost every article that's relevant to sort of BNC apartments. So that's another good marketing tool, and at the back of it has all your listings.
Yeah, and that's another thing we do. We try to take it a step further from a lot of other groups in DFW, and that we come up with a market intelligence report. That's what we call it every month, and that goes out to all of our registered website members. It's got a lot of great information on there. So yeah, we're really proud of that, and yeah, that's another way we try to keep everybody informed. It's not just about the deal; it's about keeping people educated. Things are changing really fast all the time, and so it's hard to keep up with. So we try to put everything in one neat report.
So what do you think the strongest submarkets of the Dallas-Fort Worth area are?
Well, here in Fort Worth, I don't think there's any arguing against the fact that the Chisholm Trail Parkway has been a game changer in Southwest Fort Worth. Along that toll road, it's just the epicenter of growth in Fort Worth right now. So a lot of B product down there, and not a lot of new construction. Some, but not nearly enough to overwhelm the market. So I love Southwest Fort Worth. East Fort Worth has been great for workforce housing rent growth. I've seen 10+% rent growth in East Fort Worth for the last 3-4 years. It's been incredible. We sold a property in East Fort Worth at a 6 cap in 2015 for $32 a door. We're selling one now at around a 6 cap, so similar cap rate, right, for $65,000 plus a door. That tells you what rents have done in East Fort Worth. We really like North Dallas. Everybody likes North Dallas. That's no secret. But Northeast Dallas, Richardson, Lake Highlands submarket, that's really turned a corner, and we think it's kind of hit a critical mass where there are enough good owners and enough good capital there, where it's kind of a paradigm shift over there.
All right. If investors want to learn more about you guys, maybe tell us the website and how to reach out to your team.
Sure. Well, you can reach me anytime on the phone or coming to the website, www.silvamultifamily.com. Myself, Ford Brawley, Mark McCoy, and Brenna Skinner, we can all be reached at 817-932-6100. And you can email us as well. I'd say email me, al.silva@marcusmilledge.com. And all that information is on our website, which, once again, is www.silvamultifamily.com.
So, Al, we appreciate you being in the podcast today. We've learned a lot. Again, anything else we should be talking about? Anything that you are pounding the table on?
I think the market here has a lot of legs to it. And, people get nervous about where we are in the cycle. Certainly, real estate cycles come and go, and we'll have more cycles overall. But, what I'm pounding the table on is the fact that DFW, this is not a cyclical event we're experiencing here. This is a generational, a major shift. It's a secular shift that's taking place over not years, but a generation. So I really want to stress, that the growth that we're seeing here, it's long-term, healthy growth. And if you're here and you play your cards right, you're going to do really, really well.
So I think we'll wrap that up. Al, some great information. We appreciate that. James, thanks for hanging out. Michael Becker, is there anything else we should be talking about in the Old Capital podcast?
What do we have coming up here, Paul? So on October 5th, we have an event. Have we decided to announce that yet? Or it's still a secret?
I'm going to let James Eng tell us a little bit about that.
So Thursday, October 5th, at the Addison Conference Center, 10 a.m. to 7. Al will be there. We'll have listing brokers, property managers, lenders, everybody in the DFW multifamily space that you would need to meet. And if you're not on our email list, send us an email or go to the website, oldcapitalpodcast.com, and we can get you that event invite.
And how long is that event?
So we'll kick it off around 10 a.m. for registration, and it'll go from about 11 to 7 o'clock.
Yeah, so some great information. We appreciate everyone listening to the Old Capital Podcast today. Michael, if they wanted to get the 15-page white paper report on structuring multifamily financing, where do they have to go for that?
They also go to oldcapitalpodcast.com, and then you also get the sample due diligence checklist there. So we certainly appreciate that. And if anyone likes the podcast, rating and review on iTunes, Stitcher, SoundCloud, something like that, it would be greatly appreciated. Certainly helps us get up the rankings and grow our listener base and attract good guests like Al.
That's right. So, Michael Becker, thanks for hanging out with us. James, always a pleasure. And Al, thanks for hanging out with us and giving us some great information about what's going on in the Fort Worth/Dallas apartment market. We appreciate it. I'm Paul Peoples. Have a great day.
Thank you, Paul. Thank you, Mike. Thank you, James.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.